Welcome, guys. It is Sunday evening, Sunday afternoon, evening here, August the 17th, in preparation for Monday, August 18th, trading day. Um, all right, before we jump into the market analysis here for this next week, we're continuing on with Roy Longstreet's book, The Commodities Trade Viewpoints of a Commodity Trader. He talks about the stress point in this chapter. He said, I had not been in this business very long before I came to realize that some traders were consistently able to do much more than others with a given market situation. As time passed and my experience increased, I came to know some traders who had lost everything and yet come back. Others folded and never recovered. Some traders seemed to have the knack of holding on successfully when others, who had also been knocked down in the very same arena, stayed there. I found myself wondering why traders so very much alike in so very many respects often reacted so differently in the same market situation. Since the basic market situation involved were the same for the traders, I began to look for differences in the men themselves. Clearly, it was not always a matter of superior knowledge or greater skill. Quite often, it seemed to come down to a matter of confidence, and the degree of confidence with which each man traded seemed to be hinged largely on the trader's adjustment to something which I came to think of as his stress point. Each of us in our daily lives tend to adjust to this invisible stress point. If a man lives just up to it, he can lead a happy and productive life. If on occasion he lives just a little over it, then he finds that often these are the periods in which he learns by running scared, which he'll elaborate on in the next chapter. If, on the other hand, a man lives too far over his stress point, that man will tend to panic. Sooner or later, such a practice results in disaster, finding the demands, financially or mentally, too great. A man who follows such a practice, like a piece of metal that's been bent once too often, will inevitably break. But the real problem for most of us lies in setting our sights too low, mainly because of fear. Perhaps 95% of us live too far under our stress points. For those who dare too little, the penalty which must be paid, while perhaps not as sudden as for those who dare too much, is equally sure and certain. Life becomes dull and meaningless. Those who dare not become so much beef on the hoof. They exist, but they do not live. No two traders should trade alike. What is right for one may not be right for the other. Each should trade according to his own stress point. You are an individual. God did not make anyone else like you. Why then should you think that you will succeed by trying to imitate others in their method of trading? The true formula lies in knowing yourself and in knowing your stress point. Then and only then can you be your then and only then can you be yourself at your very best. And that is the very best that you can ever hope to be. All right, the next chapter is running scared. Running scared, quote unquote, is an expression we use to denote uncertainty in a particular trading situation. By definition, it means trading just a little in excess of one's stress point. Quite often, I have used the expression, I'm running scared, and enjoying it. I've come to realize that often it is during those times that when I'm scared that I am happiest. While at first glance this may sound contradictory, it can be explained. True happiness does not come from doing an easy job. It comes with the afterglow of satisfaction which follows the achievement of a difficult job that demands our very best. Running scared permits one to behold the power of faith to work miracles as expressed in these inspiring words. Fear knocked at the door, faith opened it, and lo, there was no one there. When one is scared but not frightened, there is a big difference. Um, he is a simultaneous. I'm sorry. Let me start that sentence over. When one is scared but not frightened, there is a big difference. He is stimulated to think. Quite often, this is the only condition conducive to productive thought. Man is a lazy creature. We all tend to be as lazy as we dare to be. So long as affairs are running smoothly, there is a tendency to take things for granted. We assume that the market is on course, that there is no need for concern, that there is no risk in this best of all possible worlds. But in the real world in which we live, change is the only thing that is certain. And change has a habit of rudely awakening lethargic or complacent traders. Unless we sometimes find ourselves running scared, it is almost certain that we will not live up to our real potential. There are far worse things than occasionally running scared. The worst possible fate is to simply vegetate, to live so far under our stress point that we are never forced to think. Running scared gives one a chance to flood the dark corners of fear and superior super. I'm sorry. Running scared gives one a chance to flood the dark corners of fear and superstition with the bright light of reason and knowledge, overcoming fancy with fact, dispensing hobgoblins of the imagination, and revealing the truth that is basic to our way of life. The Chinese use the same symbol for danger and for opportunity. The truth of this seems paradox, yet has been brought forcefully home to me many times in trading. It is best illustrated by the statement from a successful young trader. I knew we would not make any money on that trade. We never did run scared on it. Diamonds are polished by grit, men by adversity. Thought that was great. All right, so the next chapter he talks about mistakes, but we'll get into that later. Hope you guys are enjoying the Roy Longstreet's viewpoints here. Like I said, I really enjoyed this book. A lot of good wisdom that he's dropping there. So, okay, so on the weekly, I've got we've just been in this up channel here. You can see on the fast line we're coming down. However, our slow line is still going up. Matter of fact, we've made new highs in that slow line here above these prior highs. So I want to keep that in mind. We did close up on the weekly here. Even though we had a little bit of pullback there at the end of the week, left a little spike tail up there. We did still end up closing up on the week. So we want to be conscious of that. On the daily, that. Okay, on the daily, we are on what I call wave 6, and I'm only calling this wave 6 based on days close above the 5 SMA, and then we do a pullback close below the 5 SMA for a 5 SMA buy. Well, this is wave 6 of those closes. We are 1, 2, 3, 4, 5, 6, 7, 8 days close above this 5 SMA, which is this yellow line. The prior wave counts, before we had those closes on these other prior waves, we had, let's go back here. Yeah, here's wave 1. We had 10, then 9 days close above, then 9 days close above. Then we had 8 days close above here. Let's see, that's another 10. Oh yeah, so that was a 10. This is an 8. And now we're starting on this last run here, which Friday just consummated day 8 of that new extended run. So we're getting a little long in the tooth on that, but that does not mean that we are, will go down necessarily just based on that. But when you start seeing those patterns, it's definitely something to pay attention to. On the 65,000 tick chart, let me draw that over here. I had pointed out last Thursday night that we made these moves up. We pushed above the 65,000 tick zone. Matter of fact, you can push up to, or 6450 that I had kind of as that potential there. Well, we end up shooting up to 6,500. So that's another 50 points higher. Then we started doing this little bit of, waning on these pushes up. And that did indeed lead to a little bit of a down move on Friday that I was calling for. And Friday I had as a sell day. I also have Monday as a potential sell day here, additional selling day on Monday. However, I've marked this 6473 zone here. Nothing magical about that, but kind of the 73 zone. It's at the bottom of where we kind of found the support here. But before we get up in this heavy price overlap area, if we're back above this zone, we could move back up towards the top of the box, which we'll see here on the gap chart or the intraday chart here in just a moment. But so this 6473, I'm thinking if we get additional weakness, to the downside, then we should stay down below that and get further downside weakness. If we're back above that, we could move back up into this price overlap area and still do a little more chopping around there. Let's pull in the gap chart or the real-time trading hours chart or intraday chart, whatever you want to call it. This is a 60-minute. Of course, you see we still have these gaps, a couple gaps down below here on the 60-minute. Right, let me get over here. So this originally on Thursday, I originally kind of had this. I noted it with the kind of dotted line here of a potential box that I thought that we could go back down and test the bottom of that box. On Friday, we did indeed go down and test the bottom of the box, but instead of stopping where I kind of had it marked off there, we end up going down to the bottom of this candle here, the 1030 candle back on the 14th. That was a low of 64.6275. Friday, we hit 64.6150. We did a full 1.25 point poke through there, through the downside, and then kind of did a little bounce back up. So again, if we stay above the 73, the 64.73 zone here, we could start moving back up to the top of this box range. Whereas if we stay down below that 64.73, we could then see potentially some more weakness to the downside. So that's just kind of what I have on my charts, on my notes, things that I'm looking at there. The internals here. Okay, so yeah, on the internals, we did start moving up in the VIX here. But I thought this was interesting. Primarily, or by and large, so here. By and large, our slow line here, let's get that slow line. Our slow line on the VIX here on the LBR has predominantly stayed below zero. We slightly went above it here for the first time, and now we're back down below it. Well, I just thought that was interesting there, the slow line of the LBR, to see if we're going to have continued push up in the pricing there. Also wanted to look here on the SPY down below. This was this first lower low was this candle here. This was on the 14th, so that would be Thursday. We made our first lower low there. On the sequence up, we were just making higher lows, higher highs all along the way. Thursday was the first lower low. Friday, we did not put in a lower low. We did put in a higher high over Thursday, but we failed to take out Wednesday's, the 13th, Wednesday's high. So I just thought that was interesting that, on a 3-day basis, we basically, we have an inside day here on the SPY where we had this high, this low, and an inside day. Obviously, that's a building of building up for a breakout. Again, will we break out to the upside and come up to this upper part of the channel here, or will we break out to the downside and have a little further retracement here back down? As you can see, kind of this channel that we've got going on here on the SPY, we could still move up. There's still room to move up to the top of this channel that we've touched 1, 2, 3 times. We've touched the bottom of this channel 1, 2, 3 times basically. So, we have some potential either way on the SPY on that channel there. So, a couple things to keep in mind there, guys. We'll meet in the room tomorrow. Happy trading, safe trading. It's a Monday. It could be a Monday environment, which could be a lot of volatility. It could also be very little volatility. So, again, let's trade safe and let's help each other out. I believe that's it for this evening. Let me just do one quick check here. Yep, that's about all I have here on my notes. So, all right, guys, we will follow up tomorrow.